financial, but I think it's not perhaps as bad as it could have been, and we've already sitting on 2 days of losses. So let's see if the morning low gets respected. The first bar is actually green from the morning low, especially with names like IndusInd Bank, which have been strong. I think this case in Supreme Court will have the most importance, and that could change things a little bit. But let's see. I mean, I think there's no trade here right now. But let's do one thing. Let's thank our technical experts. It will keep coming back to them, of course, for more. And straight away go to our market master. We have Samir Arora joining us from Helios. Samir, good morning. Thanks a lot for joining us. It's been a party out here on Dalal Street, like it has been across the global equities. But do you reckon this has come to a grinding halt, or is this just one of those pauses, and this mad rush of dollars will take the markets higher once again?
No, I think this was very unreasonable, the pace of the rally. We may say that in India or even in the world that the fall was too fast, but that does not mean that the rally has to be that fast, because both look undignified in some sense. Because the assumptions that were made, for example, the idea that a second wave is happening, it is obvious that it will happen if you open immediately and people are not fully wearing masks and going out in crowds. How can it be that the virus goes away in that sense? But from a market point of view, I think every day for the market to be up in India, let's say only in India, was also a bit too much. So I think a little bit is okay. I don't think it falls much more from what it has today. I mean, for today. Most probably close, unless the Supreme Court comes up with some new negative.
Okay, so Samir, what's the current long short then? Are you inclined to add more shorts at current levels? How have you approached this rally?
We are currently around 55 net, which is quite high in the sense that if our longer term average is 60, which is in normal times, and these are not normal times. But I thought yesterday that the idea has more or less been saved. And I thought that that is a useful thing for India, that you remove one by one some of these obstacles, and I think idea will be saved now. But today, this thing which we were obviously nobody was bothered till yesterday that today is this hearing. So now let's get this out of the way. And if this is out of the way, then we can say, okay, that relatively one problem and one scare has been removed. But India, we are self-sufficient in creating new regulations, new rules. For example, today this outlandish idea that a promoter who's been given a banking license because he's a professional, when he becomes a promoter, he becomes a non-professional and he just becomes a lala. All these kind of things, we create all these every day and trouble everybody that who's doing a good job.
Okay, all right. Samir, hi, good morning. So what does one really do now? I mean, there is this second wave coming, as we all know, in the US. There's a global risk aversion that has perhaps started just in the last 24 to 48 hours. Do you sit on cash? Do you book out of your profits? Because there are plenty that people have made. And, what should the strategy be over the next couple of months?
So I would say, first of all, that at every point in time, one does not have to be bullish or bearish. You can be confused also. It is a fair part of this business to say that we are confused. And the idea is to reduce or regret minimization. That means if the market goes up, you shouldn't feel too bad. If the market goes down, you shouldn't feel too bad. And this is similar to the famous dialogue in the movie, Jaane Bhi Do Yaro, ki thoda khao, thoda pheko. So point is, everybody should have some cash. Particularly if you are new investing, you don't have to put everything in now. You don't have to sell everything because it is not that bad. It appears now relative to what it was 3 months ago. And you know a little bit more, and the stocks are down a little bit to reflect that. If you do big picture analysis, let's say that the market is basically writing off 2020, 21, that is 21, let's say, fiscal, and basically writing it off, saying that it does not exist. Now, every year the market is supposed to give us, let's say, 14, 15, 12% kind of return. And if you remove 1 year from everybody's life, and therefore relative to February when you were supposed to make some returns for this year because the companies were supposed to do whatever they were doing. For that, you're getting a 15-20% discount. So in that sense, you have at a macro level adjusted for 1 year of lost income from the market, and therefore the market is one round cheaper or 15% cheaper. My problem is with stocks like India's biggest retailer, which is up 35%, let's say, which normally would be the situation when a stock was doing well and the company was doing well and the economy was doing well, and you would in a regular year get 30-35% return, or maybe 20% return also would be good. But so we have to only worry about stocks which are not beneficiaries in any way. But somehow the market has chosen. For example, you really believe, even though one of the guys comes on TV every day, you really believe that in this environment, somebody will let in 5 guys wearing mufflers on their face because you want to paint your house because it is Diwali. I think all these blatantly obvious ones you can remove from your portfolio. Buy the stocks which are also down 15, 20, 25%, because that looks like a fair starting point. And maybe, like we have done, buy 2-3 stocks which are down 50% on the basis that, wow, this looks good. And if things go back to normal, even after a year or even 1.5 years, and these prices go back to what they were in Feb, then there'll be a great return. But there is no final answer, because everybody should first say that they are confused rather than say they are bullish or this is the mother of all bull runs. The first logical thing is to be confused at this time, because it is so different from what we've ever seen.
Oh yes, no taking away from that. This is it is a one-off black swan event. Samir, you've changed your backdrop. We never had Helios in your backdrop before. It always used to be either your living room or your.
So
looks nice. You've converted your home into an office or something?
Only for you guys.
Oh, thank you.
I think all day I'm sitting with my Helios.
Okay. And you also started by saying that this fall is not dignified. So I thought, okay, you're in another mood altogether.
Actually, the thing in India, I'll tell you, in India, the problem is that the falls are not dignified and the rallies are not graceful. Everything is violent.
Okay.
It tires out fund managers, it tires out investors, because nothing is normal. A normal day is when you are up 30 basis points, down 30 basis points. Life is very good and I can read books. But suddenly either it will be up 3% or down 3%. And whatever you do, you are hyper on that day and basically waste a day looking at what is happening and why. It should be a bit more graceful, I think.
Okay, well, we can make that into a discussion. 1 minute, there is a breaking news which is going to be very good for banks. And the breaking news is that SBI is intervening in this case in the Supreme Court. Just to give you a backdrop, the Supreme Court is hearing a case of a home loan borrower of ICICI who is demanding that during the moratorium period, his interest should be waived. Now, obviously, because he's not been able to earn. The Supreme Court's initial observations on June 4th, when it heard, seemed to be that it was on the side of the borrower and it thought that RBI is just looking at the health of the banks, which is a very wrong thing to do. But now, I think SBI is backing RBI's stance, and it says that apparently its arguments are going to be that the viability of the financial system itself is at stake. I was hoping one of the depositor organizations will implead themselves, because the depositors' viability is at security, survival is at stake. If borrowers don't pay up, how are we going to get interest on our deposits? But anyway, SBI has apparently intervened, and maybe we will get some clarification. Finance Ministry was always expected to present its point of view today. The net of all this is that the case may not go against the banks and they may not be asked to waive all the loans just yet. Maybe the case gets stretched and the Supreme Court listens to other points of view. So that's the breaking news that's coming in, and some very leading legal luminaries like Mukul Rohatgi and I think Harish Salve, I read some names. Mukul Rohatgi is likely to appear on behalf of SBI. So this is a bit of a relief, definitely, for all the banks. Samir, go ahead. Your thoughts? This came as a bit of a scare for the banks.
Yeah.